Many venture into business with dreams of making it big. Armed with loads of passion and drive, Demetria Tembo bought this modest garment manufacturing factory and hoped to turn it into a money spinner. Sadly, she hasn't realized those dreams. She applied for a loan from 3 different banks. 2 of them turned her down. 1 still has her waiting for the money more than a year after she applied. She tells me that she put a proposal in February 2013, hoping to cash in on the end-of-year school season.
September is when the season starts. School season starts for grade 1s, and then Form 1s is in January. So I was supposed to have stocked fabrics. I was supposed to have done samples, stocks for various schools that I had contracts with. And those schools, because I didn't supply adequately, they are threatening to cancel the contracts because they are saying you don't have the capacity. I have the capacity in terms of manpower, but I don't have the fabric. I don't have the right machinery to keep up with the pace.
With a shortage of liquidity locally, Zimbabwean banks have been forced to look far and wide for offshore sources of funds to lend to industry. And because Zimbabwe still has a perceived high-risk profile, that money has come at a premium and has affected the rate at which they can lend it out. Businesses have been getting money from anything between 12.5% to 30% per annum, depending on whether they get it through a commercial bank or through a microfinance institution. There is no fixed rate because the central bank is unable to regulate the sector. And that's one of the things that are making an already bad situation worse.
Right now, I think anybody could come and say, I have borrowed my money from so and so at this rate. And you can't dispute it because you are not a party to the lending and borrowing of those two. But if everybody now knows that if we run short, we go to the central bank, where the central bank is going to give us money or to lend us money at this interest, and pay back after so much.
But he does point out that banks could be transferring their own inefficiencies to customers, pushing up the price of their money. Government has committed to recapitalizing the central bank to the tune of $150 million by the end of March, so it can resume some of its responsibilities. But even then, many businesses here cry foul over bankers whom they say are applying old-fashioned models.
I'm buying machinery. That's a fixed asset. They are giving me terms of a short-term loan for working capital. Now, they also don't give me a grace period. I want to import the machinery, I want to import the fabric. They will tell you, because of their traditional approach, which is very rigid, there's no grace period. I need 3 months to import fabric from Taiwan or from Indonesia. After a month, they want their repayment, where I begin borrowing again.
It's a cocktail for disaster that has led to a 25% default rate for those lucky enough to get funding. Bankers defend their positions, saying they are disbursing depositors' funds and have a responsibility to protect them. It's a conundrum that threatens to curtail Zimbabwe's economic recovery and development plans. But Demetria and thousands like her still manage to make a plan B, albeit one that falls far short of their original ambitions.
I tried to get support from all corners, and I got family support. And I've now decided to do it in stages, rather than launching it the way I really had conceived it.
Farai Makutuya, CCTV, Harare, Zimbabwe.